big story on health insurance and life insurance premiums, we're joined by Bhabatosh Mishra, who's the Chief Operating Officer at Niva BUPA Health Insurance, to give us a perspective on health insurance companies, as well as Nilesh Sathe, who you will all recognize from his time at the IRDAI, to give us some perspective on how the industry as a whole should look at this. I do want to start by asking you, Mr. Mishra, about how the calculation will work. And of course, at this point, we're talking about it in hypotheticals. But the sense that we got from the GOM meeting yesterday is that there is consensus in moving towards an exemption. Would this be complicated, particularly because of that input tax credit issue?
No, I don't think it will be as complicated. Of course, what it means is simply if there is a waiver exemption of 18%, the entire benefit of any waiver exemption or reduction in the taxes go to the consumer, that is sure. But it may not be equivalent to the entire 18% simply because the input tax credit wouldn't apply in that case. So that's an important element. So the net of the GST rate cut or exemption and the input credit would pass on to the consumer. Nevertheless, there will be a substantial drop in premium that is anticipated because of this very welcome move by the not a move as of now, but a recommendation. And if should this materialize, will definitively benefit the consumers by reducing premium significantly.
Bhabatosh, good morning. Hiral on this side. Stay with us. In fact, let me also get in Mr. Sathe to speak to us. Mr. Sathe, you know, insurance as an industry has been absolutely underpenetrated in the country. And I think this is a move towards increasing penetration because the moment it gets cheaper, the volumes will increase. Your initial comments with one, a complete waiver in terms of taxes, and two, you know, the impact on the industry as a whole, because you're talking about two aspects. One, where you're not able to claim the input tax credit. So even if it goes slightly lower for the consumers, there could be some hit in terms of insurance players.
The first comment is I am extremely happy that the group of ministers have recommended complete exemption for life and health premiums. It's a necessity of life. Life insurance and health insurance are equal necessities as we have got necessities of food, clothing and shelter. So there was no reason for government to charge exorbitantly at 18% GST. But as he said, you know, there is a possibility, because after a group of ministers have recommended, it will go to GST Council, and GST Council will take a call as recommended, generally as recommended by a group of ministers. It is recommended that it should be totally exempt. So this is one part. To what extent the consumers will be benefited? Initially, the premium, suppose, was 1,000 rupees for 1 crore term insurance premium, 1,000 per month, let us say. Now, premium was 1,000, but 18 rupees was going from his pocket towards GST. So indirectly, he had to shell out 1,180 rupees for the cover per month. Now, what will happen? This 180, he doesn't have to pay. So the premium will be 1,000. But the insurance companies used to get input tax credit on this 180 rupees. Now, what is input tax credit? The expenses which are incurred by insurance companies, they have to pay GST on services, while they receive GST on account of premiums that they receive. Let us work out to what extent the premium will go up. Insurance companies have been saying that premiums have to go up because we had factored in the input tax credit while arriving at premium of, say, 1,000 rupees. Now they are not going to get. So let us see to what extent the premium may go up. How 1,000 is calculated? There are three assumptions, basic assumptions. One is mortality, which is a major assumption. On 1,000 rupees, if the premium is 1,000, the mortality assumption may be about 700 rupees, because that is a major assumption. The second is expenses. Third is for solvency margin, for profit and all that. Now, for expenses, suppose the provision is for 100 rupees.
Got it.
On 100 rupees, they used to get 18 rupees as input tax credit, which they had factored in. Now they are not going to get this 18 rupees. So on 1000 rupees premium, there is a possibility that premium may go up by 18 rupees, which will be hardly 1.8%. Bear it in mind. It's not going to be that significant that if 18% GST is reduced, the premium will go up by 18%. No, premium may go up by 1.8 to 2%, not more than that, as per the calculations, rough estimates.
Understood.
So
I
there
think,
is
Mr.
nothing to
Sati,
worry.
Mr. Sati, stay with us. So, yes, what we are saying over here is, if GST is removed, your increased operational costs, as well as on the back of the loss of input tax credit, there is a potential for premiums to go up from here on. Ms. Bhabatosh, then coming on this front, do you think this will then put pressure in terms of profitability as well? How would this entire calculation work from a company perspective?
No, Hiral, there could be a short, medium, or a long-term impact.
Okay.
Short-term, there could be a nominal or minor premium enhancement impact, and especially talking from health insurance point of view, the major cost is essentially the claim cost, which is the healthcare cost, right? So there, which will see no impact. In the medium to long term, in a price-sensitive market, for such an important essential thing like health insurance, where medical inflationary trend in India is mid to high double digits, in such an environment it will just enhance the wider scope of insurability, affordability, and then much larger base seeking insurance. So penetration going up is a major benefit, both for the insurers themselves and the country overall, because health protection, it is known that GDP growth in some way or other, directly indirectly, is related to protection, health protection, that leading to better health, GDP growth. So I think overall the medium to long term impact looks very positive of this, which is going to be achieved through much higher penetration in a price sensitive market.
And of course, this effect is going to be cumulative down the line also, because we're talking about this as a percentage of premia which are heading higher. Let's face it. Mr. Mishra, can you give us a sense of that? We've seen a lot of people talking about health insurance premia going up, particularly in certain age categories. Can you give us a sense of what the trends have been, not just for your company, but I'm talking about the industry as a whole?
See, when we talk of health insurance, unlike life insurance deals with only one variable factor, which is mortality, which is continuously reducing. And health deals with morbidity, which is continuously increasing, because if you live longer, morbidity goes up. Plus, we deal with medical inflation, which life payout are practically capped, whereas this is lifelong policies. So whatever happens in healthcare from a cost standpoint influences the premium, because the major cost, let's say 65, 70, 75% of this, perhaps 80% in some cases, is just the healthcare cost or the claim cost, right? So we need to really look at what is driving this premium. What is driving the premium is absolutely high, much higher than general inflation, and perhaps among the highest in the globe. Medical inflation that we are seeing, especially post-COVID era, in the healthcare cost in the country. And that is giving rise to a situation where health insurance premium becoming unviable.
Yeah.
By the way, we must recall and keep it in mind, health insurance as a business in India is not greatly profitable even today. There is no cumulative profit. So the premium is a reaction to what is happening in the inherent 75-80% of the claim cost, which is healthcare cost, right? So I cannot comment on the industry, but as far as Niva BUPA we are concerned, we try to pass only the inflationary adjustment, which is single digit inflation periodically to customer, to smoothen out any cost increase that could go higher.
Got it. Absolutely. Thank you so much, Mr. Mishra, and also Mr. Sate, for that lovely explanation as to what could occur if this is passed through.